morning and welcome to Trading Places Live on StockCharts TV. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host here at Trading Places for the next 30 minutes, featuring everything you need to know as you prepare for another trading day ahead. Well, I guess first, before we get into things, I do want to just say, Zach, welcome aboard again. Thanks for coming in and getting us started here. I know you're out there on the West Coast, so pretty early out there. How you doing this morning?
Doing pretty good. I think it's been a kind of a fun week, honestly.
I mean, it's been a big week for StockCharts TV, right?
Yeah, totally. So,
yeah, we got a lot of new shows that have been. What's that?
But how's your heat wave going out there?
Oh my gosh, yeah, I saw something yesterday that showed that Charlotte. There was a picture of Charlotte and a picture of Phoenix, of course, out in the desert. And Charlotte, I think, was 98 degrees and Phoenix was 86. So all I have to do is just move to the desert, cool off a little bit. But it is supposed to break. I think today and tomorrow are the last 2 days where we're supposed to be in the upper 90s. And thank goodness, because I'm going to the Carolina Panthers game on Sunday. And that would have been brutal out there at 1 o'clock in the afternoon with 99-degree heat and the sun beating on me. But it's going to cool off. So things are looking up, Zach.
Awesome. All right.
All right.
Have a fun show.
What's that? I'm sorry.
Said have a fun show, Tom.
Oh, appreciate it. Yeah, let's go ahead and jump in here. I'm going to start off with the market recap and take a look at what we saw yesterday. It wasn't pretty, but, and I don't want to, put any silver linings on there. We did come off the lows. So I guess I can go ahead and say that we didn't close on the low. You can see the Dow Jones Industrial Average, though, yesterday was down almost 500 points. It had ticked below 26,000 intraday, came back up, closed just a little bit above it. The S&P 500, I mean, really going across the board, it just wasn't very good. We didn't see great action overseas overnight. So it's just, we're heading into today looking for something, a catalyst for some upside momentum. I do want to point out of all these indices, I really want to watch the NASDAQ the closest. You can see these August lows getting pretty close now. We did close on the NASDAQ below 7,800 and anything below 7,700 on a closing basis could be problematic. And this is one of the key indices that I like to watch with a lot of the aggressive tech stocks included on the NASDAQ. So I really want to keep a close eye on 7,700. I'm not ready to throw in the towel in the bull market if closes below 7,700, but certainly it could add to more intermediate term weakness. And that is something we want to always be mindful of, especially if you're short-term trading. As far as sectors go, you can see across the board again, everything was down. All 11 sectors finished lower. We did see relative strength in areas like real estate, utilities. These are two of the defensive areas. But really across the board, it wasn't very pretty. Most of the indices lost about 2%, give or take a little bit. Like I said, real estate only down 0.62%. So we saw a little bit of rotation towards safety. Saw the same thing with the bond market with treasuries rising and the yields coming down. So definitely yesterday was a flight to safety with the market very fearful. Volatility, which I will talk about in just a bit, was shooting up off the charts again, and we always want to be mindful and careful of that. Got an interesting chart on the VIX I'll show you in just a little bit. All right, as far as what is going on this morning and what happened after the bell yesterday, well, we did have crude oil continuing to move a little bit lower today. It's flat, but it was down a lot yesterday. This morning, initial jobless claims came in a little higher than expected, 219,000 versus 216,000. E-Trade joined the online brokers. Last couple of days, we've seen Charles Schwab and Ameritrade announce zero commission trading. E-Trade joining the group today. All three of those stocks really being hammered this week, though, on that news. And honestly, they have not been performing well leading up to it. Wall Street saw this coming. They've been abandoning online brokers all year, and now we're getting the big news and further drops in these stocks. Now that the news is out, stocks are probably getting closer and closer to a bottom. I want to watch them and see how they perform before I would get interested, and especially see what their guidance is as they go forward when they come out with their next quarterly earnings report. September PMI services, September ISM non-manufacturing services, and August factory orders will all be coming up today after the market opens. So we'll want to watch that. Of course, we had the ISM manufacturing number come out and that was incredibly weak, and that's kind of what's gotten everything going. The ADP employment report was out yesterday morning, and that was a little bit lighter than expected. Of course, that everybody's watching for tomorrow for the non-farm payrolls. To me, that is the biggest economic report. When we start to see the economic or the jobs numbers going down and the rate of change beginning to turn negative, that's when you really have to be concerned about the overall market. I've not been really seeing that, so tomorrow's number is going to be really important from that aspect. All right, I want to go ahead and take a look at the S&P 500, and we take a look at the S&P not just from the big picture, but I like to start from short-term levels and then kind of move it out. Now, this is an hourly chart. I did put 6 months on here just to give us some perspective, but this is an hourly chart. And you can see the last couple of days, October has not gotten off to a good start. I know there are a lot of folks out there saying, well, October's a bad month. October gets a bad name. The last 20 years, October's been the best performing month in the for the S&P 500. So I think that should say something about the month. It's not that bad, but it's associated with some very, very bad months. October 1987 immediately comes to mind. Looking at this chart, though, on an hourly basis, I'm going to just take this these lows, and this is a little bit of a stretch, but you can kind of see maybe if we do continue to strengthen here, you could almost draw this line connecting these prior bottoms going all the way back to early June, then into August, and then what we saw yesterday, we might have gone, if we go up here and connect all of these, try to connect these two, you can see we dipped just a little bit below and then came right back up. I want to watch to see whether or not the lows from yesterday hold. And again, it's going to depend a little bit on the fear level of the market. I'll get into that VIX in just a few minutes. But the VIX has been on the rise, and anytime the VIX is on the rise and the market is moving down and clearing support levels, you want to be really mindful and maybe not get overly aggressive. I think there are reasons to take a shot maybe on some stocks that you like that are coming down with this weakness, hitting key support, but I would keep stops tight, because if we do break down, lose this trend line, the NASDAQ loses that 7,700 area that I was talking about, that could lead to some more significant selling. Doesn't matter about the long-term bull picture in my mind. Short-term, anything really can go. So you want to be careful as the volatility picks up. But here is that hourly chart. Yes, we've been coming down. I was watching this channel for a while, and I had been pointing this out for the last couple of weeks to Earnings Beat members, thinking that we would probably go back into this gap support zone. 2940 to 2960 is what I was expecting on the pullback. We did break down with that news on the manufacturing, continued selling off, and now it comes down to the trend lines, and then August support levels are going to really be important, I would say. So let's keep an eye on that. All right, now I'm going to step it out. Let's move out from an hourly chart to the daily chart. Now, this goes back a couple years, but gives you an indication of what's going on from a longer term perspective. I view 2018 all the way to now as really just being consolidation. Yes, we had a little bit of a breakout here above the January high, another little bit of a breakout here. July was pretty good getting that breakout. But if you follow my historical patterns and what I talk about, they'll say go away in May. I always say go away in mid-July. It doesn't have the same ring to it. But mid-July to the end of September, historically, is the worst time of the year for the S&P 500, dating back to 1950. So this is a time of the year that we want to be careful. We saw the big drop. We came back up, couldn't get the breakout, but that period is now behind us. What I can tell you is that the best time of the year is from September 27th through about January 18th. So we have now entered into that time period where historically the market ends the period higher than it began it, I think about 80% of the years since 1950. So 4 out of every 5 years, the market is going to be higher January 18th than it was on September 27th. So I think that's really important to note, going forward. Just seasonality, we've got that kind of at our back. The wind is at our back. We'll see whether or not it helps, but at least historically, that is something to keep in mind. All right, so on the daily chart, a couple things that I notice. As we keep moving higher, you can see with these highs, the PPO is going down. So there's just not enough thrust to really carry this market higher. But the selling, we had the big selling in the fourth quarter of 2018. You can see the huge drop in the PPO. Then we had the pretty steep sell-off in May, another drop in the PPO, and then August weakness and a drop in the PPO. But the PPOs keep getting higher. So I'm just seeing this squeezing taking place and the market just consolidating like it has over the past 20, 21 months. The big difference is that the volatility isn't what it was in the fourth quarter of last year. It isn't what it was back when we had the huge drop in January, February to begin 2018. So that's something to keep in mind. Let's stretch it out. Take a look at the weekly chart. Now, this goes back the last 3 years. I'm going to stretch this out to 10, which is basically the duration of this bull market. And one thing that I would just say is that if you connect these highs right about here and just bring them across, well, let's connect these highs over here. So if you take the highs through the peak in 2014, 2015, and then that peak in 2018, connect those, and then you just connect this and drag it, you will see that that slope of the line perfectly connects the major lows throughout this bull market. When you look at the VIX and the huge move in the VIX, and again, I'll pull this up in a minute. When you look at the big moves in the VIX, they connect the lows in 2011, 2016, and 2018. Those were huge spikes in the VIX and set major lows. That's one thing I like to use the VIX for. When the VIX goes to extreme levels, that's when the market is at its most fearful and tends to set the most important bottoms. And so here, as you can see, this trend line along the tops perfectly connects these trend line or the bottoms along the bottom of this trend line. So what we have is a nice channel. So I think we're in this bull market. I could say all the way down to 2,600. Now, do I want to see it go down there? No. Do I think it's going down there? No. But if we lose the August lows, I do think we could go back down to about 2,725, which would connect these two lows back earlier in 2019. So that would be a little bit of a support level. I could kind of draw that across right there for you. So that's just above 2,700. So if we lose August lows, that's kind of what we want to be looking for, is to see whether or not that support down around 27.25 holds. In my mind, that's kind of a worst case scenario. Obviously, it could be worse, but because of my bullish perspective, that's what I hope to be the worst case scenario, would be a drop down to the 27.25 level. We're at 28.87, so we're talking about another 160 points, which would be, what, about 6% further from where we are. That, to me, is worst case if things continue to go on the track that they've been going on. All right, and then finally, I did this on Tuesday. I'm not going to spend a whole lot of time with this again, but you can see this is the long-term monthly chart, and this is why I'm bullish. Secular bear market, secular bull market, secular bear market, secular bull market, secular bear market. I think we're just starting the secular bull market, and the last two have lasted close to 2 decades. This one, since breaking out in 2013, has lasted 6 years. That's why I think the next decade could be very strong. Now, does that mean that we're going to go up every day, every week, every month? Of course not. We're going to have pullbacks. We're going to have scares. We could even have, little mini cyclical bear markets. We've seen that. We saw that before in these secular trends to the upside. So bottom line is the S&P 500 to me is in a secular bull market. We are consolidating right now, just like we did in 2014 and 2015 and into 2016. I think this consolidation will set a nice base so that when we do finally break out, I think that the move to the upside will be a very strong one. All right, let's move on. I want to show you this VIX. So what I did on this chart is up here at the top, and if one of the cool features with stock charts is the type of chart is an invisible chart. So I pulled up the VIX, and I have an invisible chart. That's why you can't see the VIX. What you are seeing here is only the moving average. So normally what we have is a price chart with moving averages overlaid. Well, here's my overlay. It's a 10-day simple moving average of the VIX, but the VIX is invisible. So I'm just looking at a 10-day moving average of the VIX. And when you see these major spikes, remember I talked about 2011, 2016, 2018, these lows right in here, and then again in here, 15 and 16, and then again here in 18, and even the one later in 18 is the bigger one. Those were the three lows that were connected. Look at the 10-day moving average on the VIX at those lows. The VIX averaged over 10 days above 40 back in 2011. Now, right now, the VIX is sitting around 20 or so. So the fact that it averaged 40 for 10 days tells you how fearful the market was in setting that low. Once you set that low, look at that. We never went back down to that level again. Then check this out. Right here in 2015, we had an average of 30 over 10 days. Set this low. And I actually was a little concerned in 2016. If you went back and read my Trading Places blogs, I actually turned pretty bearish for a brief period because I thought we were losing this support, which I, in my opinion, was a major support level because the VIX had set it. We had multiple bottoms there. But anyway, we went a little bit below, and then we started rising. And you can see then the VIX started coming down and then back up again. And then when we had this big spike at 28, averaging 28 over 10 days, that set that low. So that's why I think this trend line and these lows are so important, because they were established with the market panicking. And when you get the thing you have to understand is market makers, I just say they go on vacation. When you start getting these free falls, they go on vacation. When they start buying to set bottoms, those are in very, very important bottoms. And so I just wanted to share with you the charts on those. All right, next up, let's take a look at some earnings. And I'm going to start with Bed Bath & Beyond. BBBY, Bed Bath & Beyond. Stock had been downtrending. We saw a little bit of a pop for about 3 or 4 weeks. Couldn't get a breakout, pulled back. Well, it is looking to move lower today. I think it is down. Last time I looked in pre-market, it was down almost 6%. Look at the relative strength of this stock versus the specialty retailers. First of all, look at specialty retailers going down. They had just gone down and set a new 52-week low just a week or so ago. And now this stock had been in a downtrend, although over the last 6 weeks or so started showing a little bit of relative strength. But this was not set up great, in my opinion. If we could have, with earnings broken out above 11, or maybe we still will, then things start to improve. But until we get that price breakout, I'm looking at this relative strength, not only in the group, but in Bed Bath & Beyond. I don't want any part of this stock. They did beat on their bottom line. They missed on their top line, though. ANGO, they doubled their bottom line expectations, 8 cents versus 4 cents, but they fell short on revenues. Another stock where you've got medical supplies moving lower. Look at the relative weakness, medical supplies, 52-week low just a couple of days ago. And one of the weakest stocks, ANGO. Stock, I did not see a pre-market price. I didn't see any trades when I looked, and this isn't a heavy volume stock. But looking at this, breaking to a new 52-week low in a market like this, which hasn't been that bad, this isn't a stock that I would be interested in. Now, a couple of companies that did come out with some pretty good numbers. One is Pepsi. Pepsi beat on their top line, beat on their bottom line, $1.56 versus $1.51. Last time I saw it was up about 2.25% pre-market, which would take it up, probably at about, that should be about a $3, maybe about $1.36. If we don't get the breakout today, I think a lot's been built in. It probably will come back down. I think you might have a shot at the 50-day moving average, unless it really strengthens and breaks out on the open. I would suspect maybe we'll see a short-term top on Pepsi, come back down. But this has been a relative leader, and the group has been pretty good. So it is relative to the S&P 500, looking good. Pepsi's been looking pretty good. So I like the stock, but if it doesn't make the breakout with its earnings at the open, I think maybe you can get it a little bit cheaper. STZ, this is Constellation Brands. Looking at the relative strength, not a really good performer relative to the vintners, distillers. But the group overall has broken out to about a 10, 11-month relative high. So you got a group that's on the improve and a stock that had been weak, but they did beat on their bottom line, 291 versus 262. Top line, they just matched estimates, 2.34 billion. I think the stock needs to get this breakout above about 212, 213. Until it does that, I'm going to be a little nervous. If it breaks 213 with volume, knowing that the group is performing well, and the stock can continue to outperform like it has for the last 3 or 4 weeks, then maybe you can make an argument for it with a tight stop. But right now, I'm going to wait and see how the stock does. Coming up after the bell today, Costco. Costco, I think, will report good numbers based on what I'm seeing on the charts. The group overall has been a pretty good relative performer versus the S&P 500, and Costco, relative to the S&P and relative to its peers, has been performing well. So in other words, Wall Street likes it based on what they're hearing, and if Wall Street likes it, I'm generally going to like it. I expect Costco to have good numbers after the bell, maybe gap back up, maybe move toward that high. We shall see. Any earnings report can go in either direction. Just because it looks good doesn't mean that Wall Street's getting all the news from Costco. Some management teams aren't great at sharing exactly what's going on. So you still have to be somewhat skeptical. But at the same time, at this point, I would say looking at this chart, I think Costco comes out with a good report tonight. We'll see. All right, next up, let's move on to On the Brink. Now, what I wanted to do on the Brink is just give you a number of stocks that literally are on the brink. I mean, they are either on the brink of a breakdown below a 50-day moving average, maybe a price support level, something. And so from a long perspective, some of these might make sense because they are at key support levels, in my opinion. So you can keep your risk somewhat small, keeping a fairly tight stop. But if you look at AutoNation, this has been one of the better specialty retailers. Now, I just talked about specialty retailers not being great. And if you're in specialty retail, you want to, if you're in a leading stock, and that's what AutoNation is, you can see AutoNation relative to the specialty retailers just set a new 52-week high, outperforming the S&P, even though it's part of a group that has just set a new 52-week low versus the S&P. That tells you a pretty good company. Here you got the big volume on the earnings, big move up, pulled back, and then broke out again. I would just be a little careful here because volume seems to be dissipating. You're in a weak group. I think a close below, the 50-day moving average, currently 48.81. I would say maybe a close below that level. I would be a little bit more careful. I think if it closes below that, we could see another test down here, 46, maybe even 44. So I don't want to hold it all the way down there, but it is hitting a price support level. This was price resistance, pulling back, hitting it, and so a bounce from here is possible. So this is just a key area of support, in my opinion, for AN. Another one, MANH. Let me get out of here. This is Manhattan, which is a software company. A lot of the software, I featured one on Tuesday in my three you must see. One was Coupa Software, COUP, and it's bounced pretty nicely this week. I think Manhattan's kind of in that same, has that same look to it. Here, if you take a look at this, right about this level, 79-ish, this has been good support. Here was your earnings report, huge gap up, went all the way up to 90, pulled back, held 79, made a run up to 87, back to 79, 85, back to 79. I think you're getting the picture. 79, pretty big support. So this one certainly is on the brink, but this is also a level where we might get a nice reversal. Pretty good reversal yesterday after going down to low 78.54, coming back up above 80. All right, another one on the brink. How about Visa? Visa looks to me like it could be on the brink. Visa had this low in August down just below 170. I'm going to call it about 168. Check out these lows just above the 20-day over here, right around 168. Also the breakout, excuse me, the breakout above 165 here has not been tested. So I think 165 to 168 is going to be the key area. Yesterday we got down to 168 and change. We were just up at 186, 187 not too long ago. Visa looking pretty interesting. And we'll do one more just for the fun of it here. How about IART? This is Integra Life Sciences Holding. After coming out with some pretty good earnings, we had the big gap up. Stock has not tested that level yet, but it did come down and test its 50-day and set a low at around 58. And notice yesterday it came right down into this range before turning around. So I think this is a key area on Integra, IART. Let's see if that holds. All right, and now to wrap up, we're going to get into 3 you must see. And the first one that I am going to focus on here is just simply the price of crude oil. It has been, remember that big gap up, that 12% move? That is way back in that rear view mirror now. Look at the huge move down since then. Every one of these candles filled or way off the high. That just tells me there's a lot of selling going on here in crude oil. Could be, again, related to the economy, global economy. Market very concerned there. But look at these lows, June and August, and the move on the downside. We really want to watch $51. Over the last 6 months, that level has been holding. So that would certainly be one chart that I would want to continue to watch. So I will save that and hang on to it. All right, next up, another software company. This company was upgraded today by SunTrust, OKTA. The reason I'm watching this is software, I'm waiting to see some signs. Outside of Microsoft, there aren't a whole lot of software stocks that have been performing very well. But off of all this selling, OKTA, and this had been one of the best performers, by the way, OKTA started this selling. You can see these reaction highs back up to about 108, 109, intraday even a little bit higher than that. But I'm looking at the candle bodies. 108 over here, and then down here about 106 and a quarter. With today's upgrade, I'm going to be looking to see whether or not we can get above the 20-day moving average and these resistance levels. If not, we could have some problems. So looking for a little bit of help in software. Maybe OKT gives it to us, but be careful if we get a false breakout at that 20-day and reverse lower. Final stock I want to show is a stock I actually own, Enphase, ENPH. Loved yesterday's candle. I was a little worried, to say the least, during the day yesterday. And if we go back down below yesterday's low, I'm going to be worried again. But this was a pretty key area of support. We gapped beneath it. We're trading down intraday, and then we rallied on increasing volume from the prior day to come back up and close above that gap support level at 21.75. So ENPH is one that I certainly would be keeping an eye on here for sure. So those are the 3 you must see for today. I am going to get ready to wrap everything up here. Always a pleasure having you in. Really appreciate you being with me today. Thanks so much for joining. Remember to tune in to Trading Places live here on StockCharts TV every Tuesday and every Thursday from 9 to 9:30 Eastern. I also conduct a similar Trading Places webinar on Mondays and Wednesdays from 9 to 9:30 Eastern at earningsbeats.com. Be sure to check out my blog, Trading Places with Tom Bowley, each morning, as I'll provide a link on those 2 days, Monday and Wednesday, so that you can access those webinars. All right. Well, everybody have a great day, and I'll see you back here next Tuesday. Happy trading.